I'm speaking for Frank here. He can interrupt me. But we are bullish on oil and energy because we want to bet against the policies worldwide for energy and the coming policies that are going to fix the Russian-Ukraine war. Frank, earlier this week, oil dropped over 5% in a single trading day on rumors that OPEC was going to cut production. Saudi Arabia, leading of OPEC, was going to cut production by around 500,000 barrels a day right before, so this is December 4th is their next meeting, because on December 5th, supposedly these more sanctions from the United States and Europe go in on Russian oil. So oil drops 5% in a day, only later on in the trading day to say, OPEC spokesman comes out and says, well, we're really not talking about that. So what does oil do? It reverses higher. Then oil drops again because you have record cases, I believe breaking out coronavirus cases in China. You have more economic locks down there. We can talk about how it's avoiding the mighty Apple. Frank, we don't want to talk about it loud because they're rioting over there. But oil is just this ping pong back and forth. And in the short term, the price could go low. To your point, it's over 12 months lows. But oil stocks and other stocks like shipping have not pulled back. They're at 52-week highs in case. The entire point of this is going through December. I want to say December is a cap month because you have governments trying to cap the price of Russian oil. There's rumors from CNBC to Reuters to the Wall Street Journal. Frank, they're going to try to cap the Russia per barrel of oil to be sold at somewhere between $60 and $70. Some countries think that's way too high. And remember, the entire point of this, let me dumb this down to my level for everybody. They, meaning the United States and Europe, are trying to cap the price of Russian oil sold to the world. That's difficult because Russia says they're not going to play. They're not going to sell to anybody that puts a cap on their oil and energy. 2, you have to threaten everybody else to follow your lead because you don't produce it and you don't ship it. There are insurance sides. That's what they're trying to do. They're trying to squeeze the insurance of the cargo itself because the United States and Europe control that market. Basically, everybody under the rule of the United States and Europe insure those ships. My point is that in the short term, oil could drop to $75 a barrel or lower. It does not, and I hate to sound like I'm not changing my mind because, as you say, when data changes, but nothing on the refining side, nothing on the the production side is making any meaningful difference over the next few months. I would take any weakness to look to add. We definitely will in CRA, as I have more influence on that, Frank, than any other product here. But your name's on the door, so you got to watch out for me. But overall, it's great to see oil trade on rumors like this because it shows you, in my opinion, how tight of a market it is globally. And I think the risk is much higher upside than downside from current levels. And again, if you're hiding out in oil stocks, you're not getting hurt like the price of oil is. That's a good thing for investors.
Yeah, definitely a good thing for investors. It's so amazing how... just the G7 about to implement prices on Russia oil. I just love how Russia is like such the enemy, right? Even though we don't have almost any exposure to Russia. Every time there's collusion with Trump, is Russia. Hunter Biden's laptop, it's Russia. They're responsible for our inflation, it's Russia. I mean, we blame every single thing on Russia, right? We never blame it on China ever, right? I mean, we still can't say that, that COVID was started there, even though they didn't let, the World Health Organization or anyone else go into Wuhan, and the WHO still came out and said, "Oh, they handled COVID great" and stuff like that. So it's just amazing how we're not allowed to say anything bad about China. Yeah, I think it's so much worse than Russia in terms of what they're doing, and it's crazy which the videos that you're seeing. We'll talk about that in a minute, but just you look at Russia here, and this is going to the bigger conversation is what are the purpose of price caps? Right, so price caps is to limit the revenue Russia can make from its oil exports while also averting a shortage of the fuel, right? So that's the point of it, which I think is hysterical. So basically what the world is saying to Russia is, listen, we desperately need your oil, but we want to make sure that you're going to get poor selling it. How is Russia going to respond to this? I mean, maybe they could say, okay, F it, we're going to cut production by millions of barrels, which would destroy the EU, and oil prices could go up significantly. I think JP Morgan had like a $190 target of something like this, and this was like a few months ago when they had this whole report. You're looking at Russia, and what there is, again, not too much exposure when it comes to the U.S., but the second largest exporter of cobalt, which is a very important element in making recharge batteries. World's second largest supplier of vanadium, used in large-scale energy storage and steelmaking, supplies 10% of the world's nickel, again, a big component for batteries and cars. China's one of the largest importers from Russia, accounting for 15% of Russia's total exports. The UK accounts for 7%, Germany 6%. So, Russia's a really big deal to a lot of places, not us, but a lot of places. Also, the world's largest exporter of wheat, which impacts food prices. One of the largest exporters of fertilizers, right? When it comes to fertilizer is very important, right? It helps increase crop yields. Produce
only if you want to eat.
Yeah. More crop, only if, right? So people don't talk about that, but responsible for 40% of global exports of potash, Belarus. So just be careful if you're going to mess with Russia here, because Russia likes to respond. They told Ukraine at the beginning and said, look, guys, just don't talk about Crimea and don't go near NATO and we're fine. And, just, again, you look at Ukraine did the exact opposite, right? And maybe that was going to come anyway and the war is going to come anyway, and I get it. But it's you're poking the bear here. Russia has a lot of power, and I think we have to realize that. But, you look at the EU, China, India, they have tons of exposure to Russia, right? And you're looking at the power that they have, they could significantly hurt the world economy. And yes, it might be like cutting off your nose to spite your face, and I get it, right? But if you look at Russia's perspective, if they're going to go down, they're going to take many countries as possible. I'm not talking about a nuclear threat or anything, but just they have the power to really destroy or make it really tough for so many of developed and emerging markets. In other words, they have incredible leverage. Okay, and we're speaking from a stock perspective. Right? I don't agree with what Russia's doing. War is terrible. Ukraine, what's going on is horrible. They do have incredible leverage. Not sure how they intend on using it, but it makes me think this war with Ukraine is nowhere close to ending because we're trying everything we can to hurt them, and we're not able to hurt them. All the other countries, it's not really hurting them. I mean, their currency is doing well. They have a good balance sheet still. People that they wouldn't be able to hold up, they'd have to stop the war, but they're not. But when I look at Russia and see what's going on in terms of oil, are price caps really going to work? Is that the way to do it? I mean, you're basically saying, hey, we really, really need you, right? We need you really, really badly, but we're going to make sure you're not going to generate as much profits on it. Well, I don't know. I think Russia's smart enough to find a way around that. Either way, I think that should be a positive for oil going forward. I'm not telling you to buy all these oil stocks at highs, but there's different places within the oil industry. Mm-hmm. So many sub-markets. I mean, natural gas is taking off today. It's up 10%. You could throw coal in there. You could throw just fracking companies in there, U.S. frackers. You could throw oil services companies that have global exposure, LNG companies. There's just so many different subsets of this that could do well. And I know that you would talk about one, which I was surprised at, is at 52-week highs, which is pretty amazing. I'll let you, I'll turn it over to you, but these are some pretty cool stocks. Not saying that you should buy them at all-time highs. I was surprised to see the chart and how much they're going up.
Yeah, and one last thing, outside of everything else, Reuters is talking about Germany's planning a 33% windfall tax on gas, coal, and oil firms. Think of the disruption you have in energy markets with the prices getting out of hand. People are hurting. The only problem-solving idea they can come up with is price caps. And to your point, we haven't even talked about, and there's articles in the Wall Street Journal that are well-written, and there's articles all over. You know what they don't talk about in the price cap conversation, Frank, is who pays for it. Mm-hmm. So let's say the price is XYZ. Yeah. Well, that doesn't mean that's actually what it's called. Mm-hmm. That's what you're willing to pay for it. Mm-hmm. Well, who makes up the difference? Well, if you just print it out of thin air, is that going to help inflation during a high inflationary time, adding money? And that's if I have one bone to pick with all the editors out there, nobody is talking about that. Anyway, I could go on a Thanksgiving rant about that. To your point, 52-week highs, you're going to have to be more specific. Hell, there's so many of them. We're talking about shipping. I know, I'm having fun. Yeah. Do you have FinViz up? Because we can look at a couple of shipping. ASC is Ardmore Shipping. That's at a 52-week high if you pull up a weekly chart, or excuse me, a yearly chart. Mm-hmm. These guys, NAT, an old familiar of Curzio Ventures, Nordic American Tankers, NAT is doing well. It's not quite a 50.
Though, $15. That's amazing. I mean, if you look at these charts, it just keeps going higher and higher and higher. The day rates are going higher.
Yeah.
And you can. This is on a YouTube page if you want to watch. If not, I'm going to explain it to you if you listen to YouTube or if you listen to iTunes or anything on our site. Crazy research, but yeah, it's just. And what was the other one? That's ASC and
ASC. NAT is Nordic American Tankers. They report earnings, I believe, on the 30th. Mm-hmm. So next week, watch out for that. It may be volatile. That is an interesting story because they do their ships carry 1 million barrels of crude. Frank, mm-hmm. That CEO is one of the most fun CEOs to follow in business. if you're an analyst, you probably hate him because he calls you out all the time. He rants and raves about his stock. It's quite comical. But they're big. I think in September, he bought another 100,000 shares. Him and his family own a large chunk of that stock. It's going to be volatile because they're going to manage their debt. Cash goes right to the bottom line when average daily rates for their shipping vessels increases. Frank,
I have FinViz up. This is like a great free site, but as you can see, if it's up, they'll throw like 50 advertising here and everything all over the place. But it's a free site. I like bringing up free sites for you guys, but you can see so many ads pop up with these sites because they're free. But it does show you the upgrades, the downgrades. They'll show you. You could screen for a lot of these things. They'll show you the insider buys and sells. I mean, all latest news on it. They give you the income statement. I mean, this is a really, really cool site, FinViz, if you guys are looking. Just, you'll have to deal with the ads because it's absolutely free, but that's okay. Again, I try to provide free sites for you guys to look at. But yeah, so NAT, go ahead.
NAT, big insider ownership. And those, like I said, these are volatile stocks because they trade, a lot of them, if you just look at, and you've talked about this in the past to educate investors, if you look at the dividend rate, it could be absorbed. Oh man, this is paying 12, 15, 18% higher. However, those are volatile, a lot like oil and gas companies. They're variable and things like that. So don't just buy this thinking.
Their
exactly.
To be in a certain percentage of payout and stuff like that. So they're not fixed payouts.
In Nordic American Tankers, to give you an idea of the volatility, this is from August 30th when they reported quarterly earnings. Their average day rates went to $20,080 per day.
Now, why are they going up? Why are these stocks at 52-week highs?
Because they have to. So a lot of it is around the Russia and upcoming sanctions. Because production, we've talked about refining capacity is still below pre-COVID levels. That's a dangerous situation because it doesn't matter what you're pulling out of the ground. It matters how fast can you refine that and get into the products for use, diesel, et cetera, et cetera. The other situation is you have oil demand already back to pre-COVID levels globally. And the big kicker here, Frank, is when you're a business and you're shipping stuff around the world, that takes time. Not to be a smart aleck, but it takes time. When you have to plan for maybe not being able to take this crude from point A to point B, and you have to increase either your travel time or you have to increase the volume before the sanctions take place, you're going to reap the benefits. So these stocks I'm going to watch closely because just mentally, it's hard to buy stuff when it's breaking out at 52-week highs. It looks like you're trying to, just chase a rocket ship. On the other side of that is when Nordic American Tankers reports earnings, they're going to give an update on, hey, what has prices done since then? What do they think after the Russia-Ukrainian sanctions and all that? A lot of it's still a gray area. But to give you an example of how much they've gone up a little bit, Nordic American Tankers said that their average per day per ship rate was $20,080 during the last quarter. That was up from $8,870 the prior quarter. So they more than doubled. Now, maybe we'll see what they report next week. But Frontline, FRO, if you're still on FinViz, that's another tanker logistics play. These guys are just going to reap the benefits. The nice thing about these businesses, Frank, is your costs are fixed. So Nordic American Tankers can tell you, hey, it cost $15,000. I'm picking a number here. Frontline, I believe it cost $20,700. Let's round up to $21,000, basically across the board for their fleet. Well, if day rates are at 30, 50, 80, your costs don't change. That's why those dividends and things can be lumpy. But the point is that we're trying to show you, hey, just because the price of oil is going down, don't fall for the idea the oil or energy bull market is over. There's a lot of pockets from producing, refining, and logistics and transporting it. We haven't even gotten to railroad strikes, Frank. We haven't even talked about, there's all kinds of other chaos we could point to this fire. So just don't get caught up in the price of oil per barrel going down in the short term, I guess.